For this example, we will consider the initial transactions of Osprey Air. This is a newly formed company that makes videos using drone technology. OA incorporates in the state of Florida and issues 1,000 shares of common stock to investors for $15,000 cash. Because OA receives cash of $15,000, assets increase. Its equity also increases because investors have contributed cash for an ownership interest in the company. Specifically, OA's common stock increases. The two accounts affected in this transaction are common stock and cash. We increase cash $15,000 and increase equity $15,000. OA purchases a video drone for $10,000. In this transaction, one asset is being exchanged for another asset. The drone is an asset called equipment. The asset is being purchased with cash. As a result, assets both increase and decrease by $10,000. The net effect is no change in total assets. We would increase equipment and decrease cash. The two accounts affected in this transaction are equipment and cash. OA receives a $1,500 payment immediately after filming a customer's wedding. Because OA is receiving cash, assets increase. An inflow of cash from providing a service is revenue. Revenue increases net income, and as a result, retained earnings is ultimately increased. The two accounts affected in this transaction are cash and retained earnings in the form of revenue. OA receives a $2,000 deposit from a customer to film his parents' 50th wedding anniversary. Cash, an asset, increases. However, since OA has not yet provided the service, it has an obligation or liability to the customer. This liability is known as unearned revenue. As a result, liabilities increase for the amount received. The two accounts affected in this transaction are cash and the liability account, unearned revenue. OA paid $250 to advertise on Facebook. Because they paid cash, their assets decrease. When assets decrease from operations of a business, an expense is incurred. Expenses decrease net income, which in turn decreases retained earnings. Therefore, equity is decreased. The two accounts affected in this transaction are cash and retained earnings or expenses. Recall that revenue and expenses are part of the accounts that make up retained earnings. OA films a cheerleading competition and leaves a $2,500 invoice with the customer. This is considered a receivable. OA expects to receive a cash payment in the future. Therefore, accounts receivable, an asset, increases. The other account to increase is revenue, because OA provided a service. Revenues increase equity. The two accounts affected in this transaction are accounts receivable and retained earnings or revenue. Recall that revenue and expenses are part of the accounts that make up retained earnings. OA purchases a second drone and camera system by signing a $9,000 two-year promissory note. The note requires payment of principal and interest at maturity. Interest is 6% annually. Equipment is an asset that is increased, and liabilities increase for the promissory note. The two accounts affected in this transaction are equipment and liabilities. OA receives $2,500 from the customer as payment on the open invoice from transaction 6. In this transaction, they are exchanging one asset, accounts receivable, for another asset, cash. As a result, cash increases and accounts receivable decreases. The two accounts affected in this transaction are cash and accounts receivable. OA pays salaries of $2,000 to its employees. In this case, cash decreases. The payment represents an outflow of assets to operate the business. Therefore, it is an expense. Expenses decrease equity. The two accounts affected in this transaction are cash and retained earnings or expenses. OA pays its owners a $1,000 dividend at the end of the month. Cash, an asset, is decreased. Payments to owners are dividends, so dividends also increase. However, recall that dividends decrease retained earnings, so the overall effect is that retained earnings, an equity account, is decreased. The two accounts affected in this transaction are cash and retained earnings or dividends. Recall that dividends are part of the accounts that make up retained earnings. The 10 transactions of Osprey Air are summarized here. OA started the month with nothing but an idea and ended the month with $26,750 in assets, $11,000 in liabilities, and $15,750 in equity. As you review this example, note that the changes to the left side of the accounting equation equal changes to the right side of the accounting equation for each transaction. As a result, the accounting equation is always in balance.